I think what we'll likely see is that there's going to be more of a tie between the actual rare earth deposit and how it's going to, who's going to actually use those materials. And you'll find that a lot of these are going to link up.
Welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. I'm speaking with Jim Megann, Chairman and Interim CEO of Eureka Resources, an exploration and development company based in Halifax, Nova Scotia, that's developing a high-grade rare earth elements project in Namibia. Welcome, Jim.
Thank you for having us.
Yeah, so for our viewers who may not be familiar with Eureka Resources, could you provide them an overview of what your company is?
Well, we're an exploration company. We're predominantly focused on rare earths, and we're working in Namibia. That's where our main project, the Eureka Project, is. And the rare earths that we're targeting most are neodymium and perineodymium.
Let's talk about Namibia. It has been known for its diamond mining sector, and in recent years, it has also become a significant producer of uranium. So how and when did rare earths become a mineral of interest in Namibia?
It's been quite some time since the occurrence of rare earths has been known in the country. I would say that obviously, as the supply chain issue has begun to become more prevalent, there's been a lot more activity in the area, and there's actually there's a number of companies that are doing some exploration there. But I think we're certainly feeling like we're one of the leading explorers in the country at this time.
Right. And I understand you've had some really good results from your exploration at the Eureka Project. Can you talk a bit more about that?
Absolutely. So a number of geologists actually got together and founded the company, and they are initially targeted the Eureka zone, and very exciting opportunity that obviously led to the listing of Eureka. And there was quite a bit of drilling that's been done since the company listed a little over a year and a half ago. It's been very positive. We're extremely encouraged about the results that we've had. Good intercepts throughout our first 4 zones. Not something that we think we want to do a mineral resource update at this time, but we've really had an opportunity and recently sort of launched a much more elaborate exploration program throughout the remainder of our property. And of course, recently, we've also acquired the property to the east, south, and slightly to the west of us as well. So we've dramatically expanded the target area that we have, which is focused around a dome that we believe, that the Eureka Dome, as we call it, which we believe has a strong possibility of hosting several rare earth targets within that. And we're very busy in that area and very encouraged by the initial results we've had so far.
Right. So where do you go from here following those great results?
Well, I mean, let's have a look at exactly how it happened. I mean, we took that area around zones 1 through 4, and basically we said, let's do a best practice analysis here. So we looked at what actually drew the founders to this area, what were the occurrences that correlated with the best grade, and then we took the entire property and we looked for the exact same occurrences. In that process, we identified 17 target opportunities, and we're in the process right now of investigating those 17 targets to determine just exactly what's the likelihood that they also may host mineralization, similar to what we're finding in zones 1 through 4. What we've seen over the past few days is that we've had some really strong indicators. I mean, let's be frank about the exploration business. You work on indicators and you continue to prove things along. We've got a couple of zones right now that we've released information on that demonstrate that look really strongly towards they're drill ready. We would definitely want to explore and do more work in that. But that's just the first couple of zones of the 17 targets. It would be unlikely that all 17 targets would end up being drill ready for us. But I think that at this stage, we think that there's a real strong opportunity to be several more targets that, as the assays and the progress of the work continues, we will have a lot more drill targets on that property.
Right. And as you, I guess, carry on undertake your exploration, I want to get your thoughts on the current supply chain landscape for rare earths. China has by far been the biggest producer, and Russia is not far behind, right? But there's this real big push about on establishing more stable supply for rare earths and other critical metals. How realistic do you think it is for the world to be able to develop that alternative, more stable RE supply?
I think it's a great opportunity in the natural resource industry, and I think what you're going to find, rare earths are not like, Canada is a phenomenal environment, or a place to promote and to work the natural resource industry. We're familiar with it, we understand it. Most people who are casual investors have a great understanding of what you do for, gold, silver, copper, nickel, in terms of being able to find it, to refine it, and to get it to market. Rare earths are really not like that at all, and they can be extremely complex. I think what we'll likely see is that there's going to be more of a tie between the actual rare earth deposit and how it's going to, who's going to actually use those materials. And you'll find that a lot of these are going to link up. So it's not so much going to be a country is going to be a supplier. I think what you're going to have is an end user is going to get associated with deposits. And that process is likely going to happen at a pace that we have not seen in natural resources before. The supply chain is tight. It's going to get tighter. And as that happens, there's going to be a need for companies like ours to potentially accelerate our exploration so that we can meet those demands and being able to get either preliminary materials or final alloyed materials to those users sooner than you would expect in any other mineral. So it's an exciting time in rare earths, and we think that, Eureka is extremely well situated. You mentioned about Namibia, its experience as a miner. It's one of the best jurisdictions on the continent. There's no question about that. We're only 100 kilometers away from a port that ships uranium. They're used to shipping the kind of materials that would be associated with rare earths. So it's not a stretch. Everybody is kind of, for everybody in country, this is a process that they can see advancing and advancing quickly. And certainly the processes and the attitude in the government is there, to make this happen. Hopefully one of the sooner projects that will likely potentially be in advance for sure.
Right. And you mentioned an interesting, concept about, well, it's not a concept, but sort of linking the value chain as a means to, fast track developments of these critical metals like rare earths. Is that key, you think, in terms of the goal towards establishing more stable supply chains?
It is actually extremely key, but I think what you're going to end up finding again is it's going to come down to the individual deposits, because each deposit, depending on what material it's in, depending on how it presents, we have essentially a mostly monosite-based rare earth showing at this time, and that provides certain advantages where bastnite would have other advantages or restraints, really. And I think what you're going to end up finding is that end users are going to be looking for deposits that have certain characteristics that work well with their requirements. And Eureka has some pretty interesting characteristics. I've mentioned before about I mentioned previously about the monazite. We have really large monazite crystals, which provides certain advantages and will offer to some end users exactly what they would be looking for. But there could be other restraints. So really, you've really got to advance that project till you get to the point that you know enough about it that you can create those links. Again, I think Eureka's perspective, we've got our first zone, which has been drilled, showing that mineralization. We've got great information about that mineralization and how it presents. We've got 17 targets that we've added on our existing property. And of course, recently we added a property which has almost double the amount of that Eureka dome, that the hosting structure. So we anticipate having substantially more targets to be able to track down other than those 17 as that transfer of that property goes into ETEC. So great opportunity, and I think there will be end users that will align quite nicely with ETEC.
Right. And you mentioned, as you advance the projects, obviously, you're looking to investors to look into these projects. So should investors be, or are they looking at, in your opinion, where the supply of REEs and critical minerals for that matter are coming from when they're making investment decisions?
Obviously, I mean, listen, to be honest with you, the number one thing I think about when it comes to e-tech is all investments are, they're a ratio of risk to reward. And, what e-tech has done is basically said, look, our Eureka deposit, which is essentially in the center of our primary property, that was one target. We now have multiple targets, and we have just added the opportunity to have even more targets. What that really is we're doing is reducing the risk. It's creating so many more opportunities that one of those areas, one of those zones is going to align great with an end user. There might be there might be multiple users and multiple characteristics within our deposit that will help align that. So I think what we're doing from an investment perspective is we're reducing the risk. We're providing more, to use a Canadian analogy, there's more shots on goal. We had one shot on goal. We now have 17 shots on goal, and we've got almost double that yet to come. And if you've got that many shots on goal, the opportunity of scoring is obviously greater. And that's really what an investor looks for: how many chances, how many opportunities, and what risk is associated with those opportunities versus the potential return if everything goes the way they want. And I think Eureka is showing a real good opportunity for that.
Right. That's a great point. So what else can investors expect from Eureka or from eTech Resources for 2023?
The next thing to expect from us is we're obviously working quite diligently on those targets and trying to determine how many more of these targets are drill ready. As indicated, I think we have one new drill target that's ready now. But while we're still in process on many of those 17, I think we'll end up with much more. I'm sure investors are going to want to watch and see if there are more opportunities there. And then, of course, with the new property, we'll be able to potentially even identify further targets. It will likely be that a very, very technical discussion that ends up relating the qualities of each of those targets with end users. And that's going to be a lot more of a difficult process for investors to follow, obviously. But again, I think from an investment perspective, I would say to people, the opportunity to have more opportunities, more shots on goal. That's what this project I think delivers in spades, and I think that's what they should be focusing.
That's great. Well, thanks for coming here and sharing your project update to our investor community.
Hey, thanks for taking the time to listen about Eureka and eTech.
And thank you for joining us, and join us again next time for another engaging conversation on CEO Insights.